All right, guys, we are live. We're live. So let me share the link so we could begin immediately. Okay. Let me get the link. Yeah. Okay. I've gotten my link. Let me just share it and then we'll begin immediately. I think I'm just gonna share it. Okay. So yeah, let me invite them. Okay, so I've shared the link. So let's just give everybody in the next 60 seconds, we should be live. Okay, so let's just wait for a few 60 seconds and then we should be live. Okay. Okay, we've waited enough. Since there's going to be a replay, I don't think there's any need for us waiting that long. Okay, so we're going to just begin with the training immediately. Okay, so as of yesterday, we were actually talking about how to combine your support and resistance, your trend lines, your chart patterns, and your breakout structures in order for you to conduct analysis. Okay, and then we did a practical analysis of Bitcoin, and then you guys can see how Bitcoin is playing out exactly as we had speculated yesterday. And that is to confirm that whatever I'm teaching you guys here is tested and proven. Okay, so if you can pay attention to whatever I'm teaching and then you can put in the effort, I can guarantee you that you're actually going to make money in cryptocurrency. And like I said, I just sent a powerful voice note on the group chat today. I'm so excited today because I just saw the people already practicing what I taught them. Okay, so that alone, make for me to see people practicing what I told them and then they're already getting results is it's an encouragement to me that, okay, yes, I'm actually teaching people that really want to up their game in this crypto industry. Okay, so I'm very, very excited to see that. Okay, so today's topic is not really going to be that long. Okay, so whenever you come and catch up, just ensure that you go through the replay section very, very well. And then, of course, if you have any question, feel free to send it on the group chat and ask me. And of course, I would eagerly respond to you. Okay. So let us begin immediately. By the way, if you're just coming and then you can hear me, you can just drop 111 so that we will continue. Okay, so let me just share my screen. Okay, yeah, because I'm sharing my screen. Like I said, we're going to be talking about what candlesticks pattern today. Mind you, we have actually been talking about candlesticks. If we started talking about candlestick, I think the third time we started the training. No, not the, when we started technical analysis. One of the first we started talking about was candlesticks. Okay, but that was just an introduction to candlesticks. We were just teaching you about the anatomy of candlesticks. Okay, but in this particular section now, I'm going to be teaching you about the patterns. Okay, there are patterns of there are candlesticks and then there are candlestick patterns. Just as we have chart patterns, we also have what candlestick patterns. Okay, so this is exactly where this training is what is coming from. Okay, and also we're going to learn how to identify and read candlesticks patterns like a pro. Okay, that is the sub theme of this particular session. And of course, just like every other training you've attended, it's going to be exciting and promises to be thrilling and fun along the way. Okay, so pay attention and of course have your notepad so you could take notes. Although the replay is still here, but I still recommend you take notes. Okay, so let's start immediately. Now, what are chart patterns? Okay, sorry. Okay, so what are candlestick patterns? Okay, candlestick patterns, as you can see on the screen, are unique structures formed by individual or group of candles, not more than three. Okay, not that's when I mean group of candles, I'm saying not more than three candles is coming together to form a unique pattern that have identified to that have been identified to inform a specific price action. These structures are smaller in size when compared to the chart patterns. Okay, now let me explain what I meant here. Now I said there are what their structures formed by a group of candles. Now these candles must not be, they can be one, but they can be one and then more than one, but they cannot exceed three candles. Okay, so the moment you see three candles coming together to form a unique pattern, and then that pattern can inform the price action of a particular cryptocurrency, that should tell you that, okay, this particular candle, this is a unique pattern. For the fact that it has happened before, remember the idea of technical analysis is for you to use what has happened before, what has happened in the past, in order for you to predict what's going to happen in the future. So now people have observed that, experts in the past have observed that when a particular candlestick is, when a particular kind of candle is formed, when a particular shape of candle is formed, or probably when two candles come together, probably when three candles come together, and then they form a shape. And after every time that particular shape is formed, a particular the price action tend to move in that particular direction. Just like we have in price pattern, anytime we see the double top, you already have it at the back of our mind that, okay, this particular price is about to go down, simply because of what, anytime double top pattern happens before, anytime that we've seen a double top pattern happening, it always signals, okay, guy, prepare, this particular coin is about to go down. Okay, so for the fact that we have that kind of things in the chart pattern, so also it is in what, in candlesticks. Okay, but just like I said, chart patterns are what are kind of much more bigger. They constitute of plenty candles. If you can look at all of those chart patterns, and as much as we are calling them chart patterns, these chart patterns are actually formed by what, by candles. You can see that all of that, whether it's M, inverted shoulder, double top, head and toe, all of them are what are all a combination of candlesticks. Okay, so when the candle is less than 3, when it's 3 or less than 3, we call it a candlestick pattern. Okay, and then when it's more than 3, and then probably giving a much more bigger picture, we call it a chart pattern. Okay, so that's just the difference between a candlesticks and a chart pattern. They all serve the same function to help us infer or to help suggest that, okay, guy, this is where the coin is going to go now. Okay, so the moment you see a particular kind of candlestick forming now, it's going to either tell you, is this price going to keep on going up? Is it going to go down? Will there be a reversal? Will there be a continuation? So that's exactly what candlesticks help you to do. Okay, so let's look at the next thing. The next slide. Okay, now classification of candlesticks pattern. Okay, now we can also call it the types of candlestick pattern. Okay, we can also call it the types of candlestick pattern, but why I'm calling it the classification, because even inside the classification we now have subunits. I guess, and so those subunits can be said they are the types. Okay, but then generally we can classify candlesticks into into 4 patterns. Okay, I can see one person is here with me. If you're the person, kindly comment 111. Let me know you're with me. If you can hear me loud and clear, kindly comment 111. Okay. So like I said, the classification of candlestick is classified into 4 categories. Number 1, we have the bullish reversal candlestick. Okay, the bullish reversal candlestick pattern. We now have the bearish reversal candlestick pattern. Okay, and the next one is the indecision candlestick pattern, followed by the continuation candlestick pattern. Okay, this is all. I'm not reading it from the screen. Okay, so if your chart is blurred, you might go and increase your YouTube resolution so you'll be able to have a much more clearer picture of what I'm saying. I say we have the bullish reversal candlestick pattern, the bearish reversal candlestick pattern, the indecision candlestick pattern, and then the continuation candlestick pattern. Okay, so I'm going to be explaining to you what each of these classification means and how you can be able to identify when a particular candlestick is which category any candlestick you see belong to. Okay, remember I said when we're in the introduction to candlesticks, I was trying to explain to you guys that each of those candlesticks, they have different shape, they have different sizes. Okay, so each of those different shapes, each of those different sizes tend to have meaning attached to them. Okay, so you can classify all of those candles you have seen us analyze in the past into 4 of these classification. Okay, so let's go into the course properly. Okay, so we have the first one, the bullish reversal candlestick pattern. Okay, the bullish reversal candlestick pattern. These are categories. These categories of candlestick patterns indicate that buyers have seized control from the sellers and suggesting that that there's an immediate change in momentum. Okay, just as the name implies, the bullish reversal candlestick pattern. What does this mean in layman terms? Let's assume that we're in a downtrend. The coin is going down, and of course, you know who is responsible for a downtrend? Sellers. When the sellers are selling, and then the coin is going up, going down. The moment a bullish reversal candlestick pattern is spotted, the moment a bullish reversal candlestick pattern is spotted, it's going to signal the trader, it's going to signal and inform trader that, guy, this particular trend is about to be over. Just as we have the double the double bottom telling us that, okay, this trend is over now, so also is what with this category of candlesticks, this bullish reversal candlestick. Okay, so the moment that we're in a downtrend, then the trend is about to change into a bullish. Remember, I say the bullish reversal. The moment you're about to see a change in the flow of momentum, it is signaled by bullish reversal candlestick pattern. Okay, so just as you look at chart patterns, when the coin gets an area of value and then maybe it gets to the resistance and then you're looking for double top. Remember, after a double top, the coin goes down. So the moment you see a double top, it signals and then it informs that, guy, pay attention. This particular coin is about to start going down. The same thing with this bullish reversal candlestick. The moment you spot it in a downtrend, it's an indication that downtrend has come to a point of exhaustion. Okay, remember I told you something about trend exhaustion. That is when the trend is going down, and then it's beginning to lose momentum. Okay, so it's started showing signs of weakness, meaning the sellers are beginning to lose power, and of course the buyers came on board. Okay, the moment the buyers begin to come on board, there's a kind of it's more like a change of button. Okay, a change of power. So the moment you observe the change of power, it is always reflected in probably the candlestick, the chart patterns, or whichever indicator you want to use. But in this particular place, since we are talking about the candlestick pattern, the reversal is always indicated by candlesticks. Okay, so there are certain candlesticks that once you see them, it informs that, okay, guy, the downtrend is about to be over. Prepare for an uptrend. That's what they call the bullish reversal. Okay, the bullish reversal. They always tell you, okay, the downtrend is over and then an uptrend is about to start. Okay, so now we have different types of bullish reversal candlesticks. We have the hammer, we have the bullish engulfing pattern, we have the piercing pattern, we have the tweezer, and then we have the morning star. Okay, now I'm going to show you all of these things. I'm going to show you how these how these individual patterns look like. Okay, how they look like. You see some of them are actually standing on their own. Some of them are a combination of 2, while some of them are a combination of 3. Okay, on rare occasions we have a combination of 4. Okay, but those ones are not really considered a candlestick pattern because they rarely occur. Okay, but then these particular ones, whenever you see them happening, by the time I begin to explain it, by the time I begin to show you them in pictorial form, whenever you see them happening, it should signal that, okay, something's about to happen. Let us prepare for a what? For a trend reversal. Okay, so that's exactly what these bullish reversal candlestick patterns mean. Okay, now let's look at the next thing. And the next we have is the bearish reversal candlestick pattern. And the bearish reversal candlestick pattern is just the exact opposite of the bullish reversal candlestick pattern, in the sense that if a coin is going upward, if the overall market movement is heading up, and then you discover that a bearish reversal candlestick pattern is formed, then when you discover a bearish momentum candlestick is formed, it will signal that, okay, guy, this upward movement is about to end, or rather it has come to an end. Be expecting a pullback, be expecting the coin, the trend to turn to a downtrend. That's what they call it, the bearish reversal. The uptrend, the bullish trend is about to change, about to reverse into a bearish movement. Okay, so that's the function of this bearish reversal candlestick pattern. And of course, look at the way I wrote it here. These patterns indicate that the sellers are gaining momentum and in an uptrend and suggesting a possible pullback. Okay, like I said, it's a bearish reversal. So probably when the buyers are going, when the buyers are buying and then they get to a particular point, and then maybe when they get to a particular height, it's probably close to the resistance, and then you see a bearish reversal candlestick forming, then it should signal you that, okay, guy, this trend is about to change momentum. Okay, so that's the function of the bearish reversal candlestick pattern. Okay, now this particular trend is going to be something as if you already know it, because of course I already spoke to you how to use chart patterns. If you know how to use chart patterns, learning how to use this candlestick pattern is going to be easy peasy. Okay, it's going to be very, very easy. It's not going to be something that's going to bother you. Okay, it's going to be very, very easy for you to understand. Okay, so now what are the types of bearish reversal candlestick patterns that we have? We have number 1, shooting star. Okay, we have number 1, shooting star. We have the bearish engulfing pattern. We have the dark cloud cover. We have the tweezer top. We have the evening star. Okay, now these are just the most common ones. I can tell you that there are over 100 patterns, candlestick patterns we have on ground. Okay, but then these are the most common ones that are proven to be credible and viable over a given period of time. Okay, so you can take your time and then go through them, pick your note, write them down, and then so that you can be able to study them on your own. Okay, so these are anytime you see, okay, you're on an uptrend, then you observe that any of this particular candlestick is forming, it should start to signal that, okay, the trend is about to change. Okay, the uptrend is about to the uptrend is weak, and then the downtrend is about to take over. That's why they call it the bearish reversal candlestick pattern. Okay. And the next one we have is the indecision candlestick pattern. Now, before we even talk about it, what's the meaning of indecision? It's like, you know when they're doing tug of war, when both parties have almost the same power. This one is pulling, this one is pulling. Nobody's willing to give up. That's one by indecision. It's more like a dilemma. We don't know who to choose. Should we go up or should we go down? That is what this indecision candlestick patterns tell you. So the moment you see a candlestick an indecision candlestick pattern forming, it should tell you that, okay, yeah, at this particular point, that the buyers are not willing to let go, the sellers are not willing to let go. When there's a tie now in that kind of situation, now you're going to see an indecision candle. Okay, so what did I write about the indecision candle here? I said that this category of candlestick indicates a tie in both the buyers and sellers pressure, a state of equilibrium between the buyers and sellers. What is the meaning of a tie? Nobody's willing to give up. Okay, they have equal power, equal pressure, and an equilibrium between the buyers and the sellers pressure. Okay, when the buyers are not willing to let go and when the sellers are not willing to let go, it reflects in a particular style of candlestick pattern. Okay, so when you see this particular candlestick pattern, this we have two types of them. We have the spinning top and then the doji. The moment you see a spinning top happening, it should signal that, okay, guy, alpha, this thing is happening. There's a tie, there's a toggle, how should I call it now? Nobody's willing to give up. Okay, that's exactly what an indecision means. The coin can either go up or go down. Now, okay, I think you can also you can call this one the bilateral. It indicates that the coin can either go anywhere depending on what happens next. Remember, once that particular candlestick forms, it's a state of indecision, so anybody can win. So what is going to help you to determine what is going to happen next, or where the coin is going to go next, is probably the next candle that forms. Okay, so after the indecision candle, what candlestick happened next? Okay, so the candlestick that happened next is going to inform you of where the trend is going to face. Okay, so that's exactly what these indecision candlesticks mean. Okay, so we have both of them. We have the spinning top and the doji. Okay, don't worry, I'm going to show you all of these things. I'm going to show you their pictures. Okay, so you can just look at them. Like I said, you don't need to cram them. I've said this in before, even the chart pattern, you don't need to cram them. Just have your sheet, and then the moment you're looking at your chart, and then you get to that particular point, and then you want to check which candlestick is forming. Once you identify a check which one tallies. Okay, I'm going to show you all of these things practically. Okay, and let's go to the next one, and the continuation pattern. Like I said, this class is not supposed to be long because this particular topic is very, very easy to understand. Okay, so we have the continuation candlesticks pattern. Okay, as usual, just like the name implies, continuation candlestick pattern simply signify the market is likely to continue trading in the same direction. Okay, so let us assume that the market is trending. The moment you observe that the market is trending, now this continuation pattern tells that, okay, the market is trending upward. The market is trending upward, and then you discover a continuation candlestick pattern forming. It means that that market is most likely going to continue going upward. We have seen this in the continuation chart patterns. In those continuation chart patterns, you discover, okay, whenever the coin is going up and then those patterns form, it means the price is most likely going to keep on going up, and up. Okay, and whenever the coin is going down and then these patterns form, the price is going to keep on going down. It's the same thing with this continuation candlestick pattern. Anytime the trend is forming and then you see any of this you see any of these structures forming, it should indicate to you that, okay, at this particular point in time, this market is going to keep on heading in the direction at which it is going at first. So if it is going downward and then a continuation candlestick pattern happens, the price will keep on going downward. Okay, and then if it is going upward and then the price pattern happens, the price is most likely going to keep on rallying upward. That is exactly what the continuation candlestick pattern means. Okay, and then this is going to be very, very easy. Am I doing something now? Okay, I'm sorry about that, guys. Somebody was trying to distract me. Okay, so I was talking about the continuation pattern. I mean, anytime it happens, it means that the price is most likely going to continue in that trend. Okay, so that is just it. Now let's look at the types. Okay, these are the types of candles. Once you see any of these patterns forming, it should notify that, okay, this particular movement is going to keep on going in that particular direction. Okay, so we have the rising tree method. Okay, these are candlesticks that are they always occur in trees. Okay, that's why they say the rising tree method. Okay, they will not have this rising tree method mostly happens in the bull market, when the market is heading down, when the trend is upward. Okay, then we now have the falling tree method. Now this falling tree method always happens when the price is going downward. Okay, then we now have the bullish harami. Okay, the bullish harami happens in just as the name implies, the bull, when the market is going upward. So the moment you see a bullish harami pattern forming at an uptrend, you should notify that, okay, this trend is going to keep on going upward. And then once you discover a bearish harami pattern forming, it means the pattern is going to keep on going downward. Okay, so this is exactly what this pattern candlesticks mean. Okay, so the next slide, I'm going to be showing you a pictorial illustration of each of these candlesticks. Okay, so you can look at it now. Okay, and let me expand my screen so that you can see it very well. Okay, now look at it. I believe you can see my screen. Okay, so this is it, the bullish reversal candlestick pattern. Okay, what I say a bullish reversal candlestick pattern is, these are candlesticks that happen at the downtrend. Maybe when the coin is heading downward and then you see this particular coin, it means that the downtrend is about to reverse into a bull trend. So the first one we have is the bullish engulfing. Look at the pattern. Look at it. A small, a fairly tall red candlestick, and then a green candlestick follows. Okay, just look at it. Now this is something just look at the shape. No more explanation. Just look at, it's the shape that matters. So the moment you're looking at your candlestick, and then you look at the area of value, and then this particular candlestick is forming like this in pair. Now you're not just looking at it as a one candlestick. They are forming what in pair. The moment you see a pair of candlesticks forming like this, it should notify, okay, this is a bullish engulfing pattern. And what happens after a bullish engulfing pattern? It means the downtrend is about to be over. Remember, it's a possibility that's going to be over. So we're working based on possibility here. It means there's a possibility that the downtrend is about to be over, and of course the uptrend will take the rally. Okay, so that's exactly what this bullish engulfing pattern is. Okay, then the next one is the morning star. You can look at it. This one is there are three candlesticks that come together to describe a particular pattern. See, I don't want you to start try. You can go and make your own research to see why this candlestick come on board. In fact, I'm going to share material to you guys, and that material is going to help you explain or understand why each of these candlestick is named like that. Okay, but just for now, just observe the pattern. That's all that matters now. You can see the morning star. Now we have a red candle forming. Then we have something like a plus like that. This plus is a candlestick. Okay, you're going to see this thing live on the chart. When by the time you begin to get yourself acquainted with the market, with the structure, you're going to see each of these patterns live. Okay, so that is the second one, the morning star. Okay, just focus on the pattern. I don't want to. This is not something like support and understand that I want to start giving you guys some real life illustration or real life example or real life explanation. No, these are just patterns. They are just there. Just to learn them, and anytime you see them, take a decision that favors that particular bias. Okay, then the next one we have is the hammer pattern. You can see it is just like the hammer, like the Thor hammer. It has a long wick and it has the body. Okay, so that's the hammer pattern. Because anytime you see something like this happening at a downtrend, just know that okay, this particular downtrend, the pressure on the finish, the coin is about to change. Okay, so that's exactly what it happens here. Okay, now the next one we have is the tweezer bottom. Okay, the tweezer bottom, that's exactly how it looks like there. We have two things, just like two hammer coming together. That's what they call it, the tweezer bottom. Okay, so it's very, very important what you know about this pattern. Okay, so I'm just going to leave you. Let's just go through it again. We have the engulfing pattern. This is exactly how it looks like. So anytime you're conducting understanding, you see something happening like this at an area of value, and it should signal that okay, this downtrend is about to be over. Okay, we also have the morning star, and then that is exactly how it looks like. We also have the hammer, and then we have the tweezer bottom. Okay, so these are what the few and the most common examples of bullish reversal candlesticks pattern. Okay, let's look at the next thing. Now the next is what the bearish reversal candlestick pattern. Of course, what does the bearish reversal candlestick pattern does? They show you that okay, the uptrend is about to change. The uptrend is about to change to a down trend. So the first one is the bearish engulfing. Okay, so the moment the coin is going up, and then you observe this particular candlestick forming, it means that the trend is about to change and start heading downward. Okay, so just look at the structure. They are almost similar. You can look at it. That one is morning star. This one is what is evening star. Are you getting it now? So look at it, evening star. Look at the shape. It's almost similar to the other ones. Okay, probably when you're on your free time, you can just take it. In fact, the book I'm going to share to you, because I got these resources from that particular book, you can sit and then you can familiarize yourself with them. Okay, so that's just exactly what they mean. We have the shooting star. Okay, remember the other one was hammer. Now look at it, it's a shooting star. It's indicating that okay, the uptrend is about to be over. Let's prepare for a downtrend. Okay, then the next one we have is the tweezer top. Okay, now this tweezer top always happens at the, remember I said this bearish reversal always happens at the top of a trend, at the top of an uptrend. Don't get it confused. The bullish reversal candlestick happens at the bottom, in a downtrend. Okay, then this bearish happens at an uptrend. So the moment you discover that a trend is heading up, and then you see this particular structures happening there, you should notify that okay, this particular market is about to change direction to the downside. Okay, that is exactly the function of these candlesticks. Okay, there are not any hard to understand. Like I said, I'm going to give you that ebook. That ebook is going to help you understand it better. It's one of the resources I actually promised to give you guys as part of the bonus in this course. Okay, now let's go to the next one. So what the indecision candlesticks. Okay, the indecision candlestick pattern. Okay, so the first one we have is the spinning top. You can look at it, it's just like a plus. Okay, so the moment you see a structure like this on the market, you should tell okay, at this particular point in time, there's an equilibrium. The buyers and the sellers have almost similar power. Nobody's willing to let go. Okay, so whenever you see a point like this happen, just know okay, at this particular point in time, the coin can either go up or go down. Okay, so this is exactly what it means. Okay, so now what do we have next is the doji. Okay, now basically we have just two types of indecision pattern. Okay, that's the doji and the spinning top. Now the doji is what if you look at the last two candlesticks, these are the types of doji. Okay, they're the types of doji that we have. Okay, so we have the spinning top. This is it here. Once it happens, not okay, at this particular point in time, we don't know who is going to give up. Now the buyers, now the sellers, nobody knows. Okay, so what is going to help you to know who is in control is what happens next. Just like the breakout, which candlestick happen next? The next candlestick that's going to happen is what is going to dictate to you where the market is going to go, whether going to go up or going to go down. But at that particular point of formation, nobody was in control. And then the same thing with the doji. You can see the doji and the spinning top are almost similar. Okay, now the first type of the doji is the dragonfly. Okay, so sometimes you might see patterns. These patterns are scary, but you're going to see them except if you don't want to practice. But the moment you say you want to practice, you keep on seeing these kind of patterns. Okay, so the moment you observe a candlestick like this, the moment you observe a pattern like this, just know okay, it's a point of indecision. We don't know who is going to take over. Okay, so you're just going to be looking out for breakout structures. Okay, so that's exactly how to use this particular one. Okay, so is the one with the gravestone doji. Okay, it's the same thing there. Once you see them, it's a state of indecision, a state of equilibrium. Neither the buyers nor the sellers are willing to let go. All of them want to win. Okay, they say, me, I know if you give up. You know that kind of they're like dry. There's a tie. Okay, so anytime you see them, just know that, okay, at this particular point, you need to be careful of what happens next. Okay, you cannot just say you're bullish. Although sometimes it might be influenced. Maybe if you sit in a downtrend, maybe let's assume that, okay, let me show you how you can just do one or two crazy analysis and know what is going to happen next. Let's assume you're in a downtrend and then you see a state of indecision. Now, once the coin is heading downward and then you see a state of indecision, ideally in a downtrend, the sellers are in control. But the moment you see an indecision pattern happening at the downtrend, it means the sellers who were actually in control have met an equal opposition power party from the ground. So that particular point, you might say that, okay, the buyers are beginning to wake up, in as much as it's a state of indecision, but for the fact that the underlying pressure meets a new kind of force, a new kind of pressure, and then it forms a state of indecision. Just like I come to your house, normally you expected to beat me in your own house, but the moment I come to, we can't draw. I don't know if you get it. I don't know if you got the illustration I did now. Just imagine they'll say, I went to this man's house. Normally, they're expecting that the man should beat me in his house. But the moment I went to his house and I began to drag with him, and then we now became what? We now had a tie. Nobody won, nobody lose. But mind you, it is in that person's house. So at that particular moment in time, it is safe to say the person that I came to his house is the weaker one. Okay, so if the person that I came to his house was the sellers, it means the sellers are beginning to get weak. Okay, I'm just trying to show you how you can apply the concept of this doji, this sort of indecision. In as much as there are indecision, there are certain factors that can help you to say, okay, even though there's indecision with this factor and this factor present, it means the sellers have lost because of what ideally they were the one that had the much influence, but they now got to a point where they could not really, they now sustain the tie. Okay, so for the fact that they had a tie in their own house, in their own territory, it means that they're about to give up the coast. Okay, so that's just exactly how you trade with this indecision candlesticks pattern. Okay. And let's look at the next one. Okay, the next one is which is the last one, of course, the continuation candlestick pattern. Okay, if I'm speaking fast, I want to beg you to please probably watch the video a second time again, because this is probably it's a bit explanatory. Okay, if you've understood the chart patterns, this shouldn't be a problem to you, because just for you to go and look at your sheet. Okay, this is what is happening now, and you know what's going to happen next, and then that is all. Okay, so this is it. The continuation means whenever the continuation pattern happens, it means whether it's an uptrend, the uptrend is going to continue. If it's a downtrend, the downtrend is going to continue. It's more like a bilateral, whichever the thing breaks out. No, not really bilateral per se. Not really bilateral. It's just showing, okay, if it happens there, it means the price is going to keep on going up. The indecision is the bilateral. Can be when we're talking about bilateral chart patterns now, whereby we don't know where it's going to happen, anywhere can break out. It's just like that. That's the indecision. Okay, but in this continuation now, it means that, okay, if it happens in a downtrend, the trend is most likely going to continue heading downward. If it happens in an uptrend, the trend is going to happen upward. Okay, so let's look at it. We have the first one is the rising tree. Okay, the rising tree method. The moment you see a rising tree method happening in an uptrend, it means that, okay, the bulls are still in control. So the moment the price can still keep on going upward. Okay, now the next one we have is a falling tree method. Okay, so the moment you see a falling tree method happening in the market, it should notify that, okay, at this point in time, the market is most likely going to keep on going downward. Okay, just look at the pattern. You don't need to stress yourself. You just need to look at the pattern, and then you are going to understand it better. Okay, then the next one we have is the bearish harami. The bearish harami, I don't know how to pronounce that thing, but then anyhow, it is bearish harami. Okay, just as the name implies, the moment you see something like this in the downtrend, know that, okay, the trend is most likely going to continue downward. Okay, and then if you see the bullish harami, it means the trend is going to it's most likely going to continue going upward. Okay, that's exactly what the continuation pattern is. Okay, so this is exactly this candlestick is should I say it's a bit simple. It's not really simple like that, but then it's easy and it's self-explanatory. Okay, personally, I don't really vibe with candlesticks that much. When I use it, it's maybe my last resort. Okay, that's maybe I don't get option again, so I'll start looking at for candlestick pattern. And mind you, if you're looking at candlestick pattern, always look at the shape of the size of the candlestick pattern. Okay, if remember when we were talking about some of the factors that could help you analyze whether a coin is going up or down. Maybe when you're done checking some things, you just look at the size of the candlestick pattern. So of course, even when you're looking at chart patterns or candlestick patterns, you need to pay attention to the size of the candlestick and then the size of the wick, of course. Okay, so all of these terminologies are nothing that they are not really strange to you, because I've explained all of them in the previous videos. Okay, so if you're kind of having difficulties understanding them, you could make reference to the past videos, and then it should help you get better. Okay, so let's move on. We'll soon be done. Okay, how to use the chart I think it's how to use the candlestick patterns here. Sorry, I don't know why I'm making mistake. This is, but how to use the candlestick patterns. Okay, forget about the chart patterns there. Number one, it's just similar. You can even look at itself, man. It's similar to the chart patterns. Okay, so number one, you what identify the underlying market structure. If you look at it, they're always the same thing. Before you conduct an analysis, you must first identify the underlying market structure. Are we in the support and resistance? Are we in the support and resistance scenario? What's the trend line? Those are the key structures you need to define. They are they're like the building blocks of any of the analysis you want to conduct. Okay. The next is wait for price. What am I? It's supposed to be price, not proof. Wait for price action to approach the area of value. Okay, wait for price to approach the area of value. Remember, I already told the area of value is very, very important. Okay, and of course, if you have been if you have been paying attention to the candlesticks, you understand that candlesticks they tend to form at area of value. Now look at it. I said for the bullish reversal now, it happens at when the trend when the downtrend is about to be exhausted, and of course when is the downtrend exhausted? So now when they reach support. Okay, so you can look at now. Wait for the price to approach an area of value. So whether it's going to be a bullish or a bearish, wait for it to approach an area of either support or resistance or a trend line. Okay, very, very important to wait for price to approach the area of value. Okay, the next thing to do is look out for candlestick patterns. Of course, you know how to do this thing. The moment you observe that the coin is about to approach an area of value, just go and pick your circle and put your circle there. Observe whatever is happening inside that particular circle. I already taught this strategy very, very well, so it's not really going to be a new thing to you. Okay, so like I said, identify the structures, wait for price action to get towards area of value, then look at them, put a circle. Okay, the moment the price begins to approach the area of value, put a circle there, and then watch what happens inside that particular circle. Okay, and the next thing you have is confirm your bias using other tools. Now, the moment they say, okay, let's just look out for candlestick patterns at area of value. So the moment you've identified your area of value and then you've waited for the price action to get into that particular identified region, they need to look out for a candlestick pattern. Of course, let's assume you identify a particular candlestick pattern. All you need to do is to confirm your bias using other tools. So let's say, like I told you, you cannot just use one indicator and say, we cannot just use because of you see a bullish engulf, you say, the trend don't reach. No. You need to confirm your bias. Okay. So if you look at it, yes, a particular candlestick pattern has formed. Look at other factors. Is it at the support? Is it at a key level of support or resistance? Is it at a key level of or trend line? Just look at all of those factors too. Okay, those factors would help you to make better informed decision. Okay, then take a trade decision that favors your bias. Okay, so let's assume that you saw a hammer. Of course, what do you say a hammer is? You say a hammer is a bullish reversal pattern. It happens at the down of a downtrend. So let's assume that a downtrend is happening, and then of course the downtrend got to an area of support. Then coincidentally at that area of support, you now saw a hammer sign, a hammer chart pattern forming, a hammer candlestick pattern forming. So the moment you're seeing a hammer candlestick pattern forming at an area of support, it's enough confirmation it's already two confirmations. Number one, you already have the price approaching an area which is most likely to bounce back up. Of course, the support from the support is expecting the price to bounce back up. Okay, so that's one confirmation. Then you now saw the hammer pattern forming. So the moment you see each of these two patterns, begin to notify, okay, this particular point in time, there's beginning to be high probability that this coin is most likely going to go up. Okay, so that's exactly how you trade with this particular. It's very, very easy, guys. It's very, very easy. Like I said, the candlestick is like my last resort. Okay, I basically work with my chart patterns, my breakout structure, my trend lines, and then my support. Okay, these four things are my most valid tools. Okay, the moment, and that's why I don't use any indicator. And then I'm not even teaching how to use indicators, because all of those indicators are just going to confuse you. Probably along the line, if you're developing mastery, or probably along the maybe when we've understood this thing very well, I'll begin to talk about one or two patterns, one or two indicators like that. But at this moment, I think it's just a distraction. Okay, because those indicators, they do not really work. Okay, you can see the way I do my analysis. I don't use any indicator. I just draw my lines, and then boom, I get my analysis very, very well. Okay, that's pure price action. All this I'm teaching is what is price action. Okay, so when somebody asks you what kind of trader are you, say you're a price action trader. You look for price action, the movement of the coin. You do not just guess. Okay, people that use all those technical indicators. Technical indicators they are scams. Do you know why I say they are scams? Because they will show you a movement after the movement have happened. Okay, when we're doing price action now, we're able to know, okay, from this particular point in time, the coin is most likely going to go up. We would foresee the movement. But if you're using technical indicators, it's after the movement has happened before you start saying, okay, it's true. This pattern confirmed it. Scam. The idea is to get the movement before it happens. Okay, so just find time to watch the video again so you can able to understand how to use the candlestick pattern. Always remember to confirm your bias. Don't just rely on one tool, okay? Even if it's the support and resistance is actually the most strongest tool, but then don't just agree or more. Use your trend line to validate your point, okay? You can see some people are with me here, but I wish you can just drop a comment. Like, oh, you guys probably came late, so that's why you're not dropping your comments. But I want to believe that you guys are actually getting and you're getting value. Okay, so let's look at the next thing, and they'll probably call it a day today. Okay, keynote using what? Why am I even saying chart pattern? Keynote using what? Candlesticks pattern. Okay, and the first one is what? This is the most difficult of all tools to use. I'm not gonna lie you. Imagine trying to look out for a candlestick pattern among, like, the whole chart is made up of candlesticks. Okay, and imagine trying to just like you went into China and then they say you go and find one particular person in China. You agree that almost everybody in China looks alike. Okay, so it's going to be difficult for you to go and identify a new person in China, especially if you're not from there. Okay, so even me myself, that's why I tell that I'm not that. Candlestick patterns works, okay, but me, I run away from them because they're the most difficult to use, okay? So we said probably you want to become a better trader. Of course, I'm learning how to use it. Not be say because it's difficult, I know goes and no, I must actually use it. I'm actually dedicating time to study them, okay? Like I said, I'm already planning on printing my own sheets, okay? I'm just going to take my time and then arrange the sheet very, very well. Probably when I get time, I start to share it with you guys. But then the one I'm thinking of getting, I think is very expensive. That one is already, it's a company that did it, okay? I think they're selling it for $97 or so. It's very, very big, just like frame, okay? So the moment I get that particular one in my workstation, I'm going to hang it on the wall, okay? So it's going to ease me a lot of stress like that. But that's going to be for like some other time. Now I don't really have interest in candlesticks, okay? So it's the most difficult of all tools to use, okay? It's a valid one actually, but then like I said, it's difficult because you need to actually you need to have an extra eye to see them, okay? So that's the first keynote you should take note of. This one is what should be used as a last resort when conducting analysis. Of course, this is just okay. Okay, thank you, Mr. Shining. Thank you. I celebrate you. Thank you. I celebrate you. Okay, then the next one we have is what should be used as a last resort. Now, this is just me trying to infuse my bias on you guys here. You can use it as your first resort, or whichever one the case may be. If you observe, sometimes when I'm conducting analysis, I used to say, this kind of thing, the body is big. Me, I just pay attention to just the size of the body and then the weak, and then that is all. But I don't really go details into the exact type of candlestick that was forming. Okay, so I always use it as my last resort. Just like we were doing yesterday, we were trying to do analysis, and then we looked at this particular thing. I don't know what's going to happen again. You look at your trainer, you're not really getting enough information. Then you might decide to just go and look for chart for candlestick pattern. Okay, it's more like the last resort. Okay, so just like say they say make you go to school and then you carried you wore your socks, you wear your uniform, you carried your bag, you carried your, and then maybe you want to go to school and then you now saw your cleaner, your eraser or sharpener. Let's use it. Sharpener is the most useless tool I've ever seen. Although it's kind of useful, but you can go to school and then even if you don't have it throughout your schooling years, it's no problem because of course you can use somebody's own in school. Okay, so that's just how candlesticks are to me. They're just like sharpeners. I can actually carry my bag, my books, and everything, and go to school and forget them, and then I'll still be able to do exploit in school. Okay, so they're just the last resort. Okay, always pay attention to macro picture, and of course, just like we always said, the federal government always rules over the state government. Okay, very, very important. Okay, so in candlesticks, this is where I know that the candlesticks are very, very reliable. In fact, this is where I even look at for candlesticks. Okay, whenever I'm doing analysis, I always look out for candlesticks on the higher time frame. Okay, the higher time frame tends to hold more credibility. Okay, so always look out for always pay attention to the macro picture. Okay, and of course pay attention to fundamental news. Okay, like I said, even if you see all your technical indicators telling that the coin is going to go to the moon, and one crazy news just happened, the rest of the market is going to crash. Okay, so always pay attention to macro news. Okay, the next one is there are over 100 patterns. There's no point cramming them. Okay, very, very simple. That's why I told you that I don't really stress myself about candlesticks, and then I was telling you about going to get my own sheet. Okay, so this sheet is going to help me. There's no me cramming them. Okay, this sheet is more like people have already done the work. They've compiled everything and then they've put it there. So once you just go and buy it, and then it's already framed. Okay, so once you go and buy it, you just go and hang it on your wall, and then enter your conductor analysis on your system. It's going to make your workspace very, very beautiful. Okay, so when you're conducting analysis, and then and of course this is something that you should always look out for. Okay, a point to come back, I'll start asking us about our workspace. Okay, where you just get your laptop, your phone, everything, your big screen, and that kind of traders vibe and investors vibe. Okay, by the time you tell people you're a trader, and then they come to our apartment like, wow, this is actually a trader. That kind of stuff like that. But I know you would love it. Okay, so that's just what I'm talking about. Okay, so you can see the chart. There are over 100 of them. Okay, like I told you, look at the whole chart is made up of candlesticks. Okay, in fact, it's candlesticks that we read. Okay, but then each of those candlesticks have what they represent. Okay, so sometimes if you have all the time, you could just be studying all of them. But me, I don't really have all the time because I've conducted analysis in the past, and then they did not really mean anything. Okay, so there's no point cramming them. If you can afford if you can, maybe you can take your own time, and if you have the time, you can compile your own chart, your own this thing. candlestick sheet. Just like I was doing, like you see all this illustration I did, I was on that compiler. I just use my idea of graphic design, and then I just put them together. Okay, so even you yourself, you can actually design your own if you have all the time in the world. Okay, you can just design them. I mean like this, but this one people say it's not even that useful. Self, I cannot come and key myself. Okay, so I'm just going to leave it. So there's no need of you cramming. Even the chart pattern itself, there's no need of you cramming it. But then the chart pattern is much more better for you to cram it as a trader. Okay, because they are much more credible tools for conducting analysis. So this one you might not really bother yourself about cramming them, but for the chart patterns, I'd always recommend that you make an effort to learn them. Okay, so let's look at the next one. If you can get a printable chart sheet and have it, or add, okay, if you can get a printable pattern sheet and have it handy, very, very simple. I already said it. Okay, so just go and get one. You can just decide to do it yourself, or probably you could just buy from online, or probably you can even go and download it online itself. I think there's just go and search candlestick sheets. Okay, they're going to show you candlestick pattern sheet. You're going to see a lot of them there. Okay, just pick one and download it. Okay, but this particular one I'm telling you about is $97, almost 40K. But then that one is beautiful, man. It's beautiful. The moment you put it in your wall, that thing alone going to give you confidence. Okay, that's not about cryptocurrency. It does not really matter, but then the kind of tools you use is actually going to boost your confidence too. You get, maybe you're using a very, very broad laptop, you're able to sit down there, you look at it, oh, this is what the market is doing. You kind of be a bit more confident in your analysis. Okay, so that is just it. Okay, the moment you have that chart on your wall, maybe in your conduction analysis, and then you look at a particular pattern, just need to just look at the wall and then look at your wall and say what even correlates to this particular pattern there. Okay, so you just identify it and voila, you're good to go. Okay, so like I said, don't ever use the chart pattern on the candlestick pattern on its own. Always confirm your analysis or confirm your bias with other structures. Okay, and I said it's your last resort. Okay, don't just say because of your conduction analysis, the first start looking at for is candlestick pattern. No. Always look at let candlestick pattern be like the last thing. See, you can even forget about self and then you still get your analysis right. Okay, but then when you don't have any option, it probably you're lost. You don't really know the direction of the market. You could just result into using your candlesticks pattern. Okay, so let's look at the next, which is probably the last slide. So this is it. Yeah, we've come to the end of tonight's section. Wow, 45 minutes. Okay, I really didn't wanted this to be long, but then I just got carried away and then I enjoyed the conversation. Okay, so look at it. Like I said, I'm going to send you an ebook. It's called the Monster Guide to Candlesticks Pattern. Okay, that particular ebook is going to help you guys master candlesticks. It's very, very good. You learn it. Okay, in fact, that particular book is going to give you better insight. It's going to help you define, so that in case you just see any, but it's going to help you, like if you see those candlesticks, but you can be able to define them. By the time you just take it's very, I think it's just, is it 15-page ebook? Yeah, it's 15 page. We have the Bible of Candles. That one is big. Okay, so I haven't even, when I downloaded that one, but I haven't even opened it itself because of there's plenty people who get time to read that one. Okay, but then this particular one is just 15 page. Okay, it's by Renatio. Okay, remember I've already told you guys to go and watch Renatio's YouTube channel. That guy is loaded. Okay, so I'm going to send you this material and then you just go through it. Maybe you can even before now to tomorrow, you can even go through it first, and then you're going to understand how to use this candlestick pattern, and then you're going to even get better insight on how to trade as a technical analyst. Okay, so this brings us to the end of tonight's training. I really celebrate you guys for being here, 2 of you. I don't know who is there with Mr. Shining. I wish the other person could respond so that I could give him a shout out. Okay, but then since he doesn't respond, there's no problem. We'll go on the group chat and then we'll continue with our discussion. Okay, so I celebrate you guys for being here, and please, guys, practice. I would never stop telling you what to practice, because whatever mastery you're finding is behind that practice that you're refusing to practice. Okay, so if you want to gain mastery, if you want to become an expert, you need to allow yourself to practice. Always practice. Even if it's one thing you're practicing every day, practice it until you're able to do it even when you're asleep. For example, now me, I can just wake up, even at a glance, I can be able to identify certain structures. Okay, that is the effect of practice. Let me not lie to you. Sometimes I don't practice a complete, I will not practice. Okay, maybe I'm so much engaged like that, but then I just make sure that, okay, in a week, don't go time me practicing at least. I just give myself a target. You know yourself, you know your schedules. Okay, just give yourself a target and then see how you can be dedicated to actually meet up to it. Okay, so this brings us to the end of Jen. Let me just show my face so that you guys can just see me, and then yeah, okay. That's my face. Yeah, so it's nice having you guys here. So peace out. See you guys in the group chat.